Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Samson Jagoras. Thanks for being on the show, Samson.
Yeah, man, I'm pumped. I've been following you for quite a while now, so I'm excited to be on here and chop it up. Pretty honored to be chatting with you today. So thanks for having me on.
Yeah, I'm honored as well. Thanks for listening to the show. But it's just amazing to see so many guests now who've been listening for a long time and are doing amazing things in the space like yourself. So a pretty amazing background that you have. So honored to have you. But a little about Samson. He's an entrepreneur, RE/MAX commercial real estate broker and president and founder of Growth Vue Properties. Over his 12 plus year career in business, executive leadership, and entrepreneurship, he has served as a professional futures and commodities broker, actively invested in real estate, and acted as a chief strategy officer at Madwire, an Inc. 500 marketing and technology company located in Fort Collins, Colorado. Samson currently puts together large commercial apartment investments throughout the United States, opportunistic land development, fix and flip, and buy and hold deals in northern Colorado, and sits on the executive leadership team at Madwire, where he helped grow revenue from $7 million to over $100 million and grown the employee base from 35 employees to 600 employees in 10 years. I mean, that's pretty incredible. That alone is impressive. 7 million to 100 million. And then just the employee count as well shows just a massive amount of, and the scale of the company growth, in a 10-year period there. So I look forward to getting into that a little bit, Samson, and even how you're applying that now to your real estate business also. Maybe why don't you fill in some of the gaps there of how you got to the multifamily syndicating operator that you are now, and let's jump in.
So grew up in Los Angeles, California, was raised on a heavy dose of punk rock and skateboarding, played a lot of sports. And about my freshman year of high school, I fell in love with football. I didn't even like football growing up, but I found it. I loved it. And all I wanted to do was play football in college. So that set me on the path that led me to, I got a scholarship to go play at Western New Mexico University. Heading into my sophomore season, was not happy playing D2 football, walked away from my scholarship, took the walk-on at the University of Colorado, which is how I ended up here. Thankfully, met my wife. We've been together for 16 years, getting ready to celebrate our 12-year wedding anniversary this year.
Congratulations, by the way. That's an accomplishment.
Yeah, probably one of my most proudest ones, that being a dad. And I was going to school studying integrated human physiology. I wanted to be an orthopedic surgeon, trying to play football.
I was going to say, what is that?
It's basically like human physiology. It's a mix of kinesiology and all that good stuff. And so I thought I wanted to be an orthopedic surgeon. Looking back on it, I'm very grateful that I didn't land in that career, partially because my grades determined whether or not I was going to go to med school. Playing football and trying to keep it all together was tough. But I'm just such an outgoing type of person. I love people. I love building things, and being a doctor would probably be the death of me. So I graduated on a Friday with a degree in human physiology, and I walked into a futures and commodities brokerage on a Monday. About 6 months before that, I didn't even know what a future or commodity really was, let alone that you could trade those types of things. And about 3 months into my career, on September 29th, 2008, Dow Jones fell 777 points in a single day, which set up the economic housing crisis. So I got my baptism in economics and real estate and investing and all that good stuff in the middle of one of the most tumultuous times in history, at least as it relates to real estate. But that's really what put me on the path to being interested in owning hard assets. All my investors who continually made money, they owned commodities, they owned assets, right? They were pig farmers, gold producers, oil producers, cattle ranchers, right? They grew corn, et cetera. Those guys made money. The people that consistently lost were the people who were speculating, right? They were just banking. It's really easy. There's a saying in the stock market or stock trading that everybody's a genius in a bull market. You could have literally closed your eyes at some points in the market and just bought anything and been successful. And you watch people run their account from 25,000 to $1 million and $1 million back down to 25,000. But the people that were consistent were the ones that always made the most money. Those were the producers. So that's what kind of drew me towards that. But right at the time, as I was coming to the career of a commodities broker and the housing market crashed, we had the evolution of real-time quotes. So companies like E-Trade, TD Ameritrade, they were all coming out with technology which allowed you as the customer to literally see in real time what the market was trading at. The age of calling down to the floor was dying because everything was moving electronic. And so the value of being a commodities broker was fading. So we had to do a lot more money management, trading systems and training programs, selling newsletters and things like that, which we did really, really well. The problem is when you're sleeping with a laptop next to your bed, because markets like the coffee market, which we would trade, open at like 1 and 2 in the morning, it really starts to crush your quality of life, really starts to eat into your marriage and things like that. So I was burnt out, to say the least, making great money, did very well in the industry. But I was ready to leave, and I was going to go be a financial planner. That's what I wanted to go do. And then I was approached with this opportunity to join a startup called Madwire, which focused specifically on marketing and technology for small to medium-sized business. I came in and helped scale up the marketing arm of that business and scale it from what it was, then eventually took over recruiting, took over training, and then led a team of about 350 marketers with a couple other people towards the tail end of my career. And then I actually officially stepped out of that business in 2020 to just focus everything I have entirely on syndication and real estate and multifamily in general. I love the industry. I love all the benefits that come along with owning it. I love selling it. I love talking about it. I love putting deals together. I love teaching people about it. So I'm just on a mission now to just really share that message with the world. And then on top of that, just bring good deals to our investors.
Yeah, no, that's an incredible path to getting to where you're at now. No doubt about it. You learned a lot along the way, and I could have gone so many different directions. Incredible that you landed up at, as an operator, as a syndicator. And so, I love the experience too that you gained, scaling that company, right? Being there through all that, through the marketing side and just the employee growth as well. I would love to hear, some tips on scaling and the marketing side that you are now using as an operator and as a syndicator, because I know that's the question I get so often personally too from other people that are trying to get in this space and clients that say, I want to scale, right? What's the next thing? How do I scale faster and do it right and those things? And so with your experience there, I'd love to hear about that and just how what you're implementing, what you're taking from marketing and scaling, and now pushing your multifamily syndication business.
Yeah, when you're first getting into it, I was 20, 26, 27 or so when I was jumping into that world in that role. And, you're just full of piss and vinegar, but you don't really know a lot yet. I'm a lot wiser now. Building a great company ultimately comes down to who you have on your team. At the end of the day, if you're getting into the world of syndication or building a business, you're not trying to create another job for yourself, right? We're all chasing one thing, which is ultimately time. And so you have to be judicious in knowing how to delegate and when to delegate. You want to delegate early and often in your business. So what I know now is business really breaks down into 3 categories: sales and marketing, operations, HR, and finance. And within that, just like you do in the syndication space, you can insource aspects of your business and you can outsource aspects of your business, right? If you're a syndicator, you're really focused on being an asset manager. You're focused on leveraging third-party property management in a lot of cases because it offers you a lot of scale. What I know from experience is building a people-heavy business is a lot of fun, and I love people, but it creates a ton of dynamics. When you go from 30 employees to 100, the dynamics shift. When you go from 100 to 600, I would spend a lot more of my time managing people than I would actually doing other parts of my job, basically. And that was the appeal, honestly, to being in the syndication space, is the economics. You can manage 500 million in assets and have 10 people on your team, 5 people on your team. You can really do it and scale really well. So when you know that your business kind of breaks down into 3 pieces: sales and marketing, operations, HR, and finance, then from there you can start to define the key roles, right? Who is going to own that aspect of the business? Who's responsible for raising capital? Who's responsible for sourcing deals, right? Who's responsible for underwriting, acquisition, startup, right? turning over the property? Who's responsible for dispositions and everything on the back end? When you know what those positions are, sure, when you're starting a business, you're going to be wearing multiple hats, but you can quickly start to delegate and offload those to other people on your team that can just simply do it better than you. It's really hard to be the CEO or the president of something and simultaneously be in the trenches. You need great people on your team. So I'm all about great partnerships and hiring great people on your team. And just like you would make any other investment, putting those dollars into somebody or giving up some equity, right, in your deals, just like you would with like a KP or something like that, to have somebody who brings more value to the team and to the stack, right? Most people have never thought that far when they get in to start a business. They just think about the numbers and how great they want to be and blah, 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 blah. And my dad is a testament to this. My dad is one of the most incredible craftsmen I have ever met. I mean, he's literally been building and crafting things since he was 13 years old. And he's tried to be an entrepreneur over the years. And he was never able to get out of the trenches, right? I'd say, you're incredible. Like, why are you working on one job right now? It's like, because, I got to get in there. And if I pay those guys, how am I going to pay myself? I'm like, because you would have 10 jobs, right? Not just one job, right? And it's scale, right? And it's thinking beyond those things and building a team. And so there's a great book. If you haven't read it, if you're getting into the business and you want to scale it, it's called Traction. And it's talking all about the entrepreneur operating system, EOS. It's a great starting point, if anything, to give you a framework on how you should operate your business. And then from there, you just hire and fire off of gets it, wants it, capable. Does this person get it? Do they want it? Are they capable? Sometimes you have great people and they just need to be moved to a different seat.
Love that. Gets it, wants it, and capable. Is that what you said?
Yeah, correct.
No, that's awesome. And it sounds so simple, right? We just need these departments. And I want to say this again, like sales and marketing, HR, finance, operations, and then you talked about who owns each part of those things. And I think it's so crucial because in the beginning, if you've never operated a business, like you don't think about that, or maybe you bring on an assistant, somebody that first hire, and it's like you're not really clear with them what their job description is or what's expected of them. And it leads to so many issues, right? And it's just poor communication. They don't know what's expected, and you're upset because they're not doing what you want them to do.
Yeah, exactly. Yeah. Expectations is definitely key, but you haven't actually thought about that. So it's pretty hard to tell somebody what to do. The other reason why that slows down your scaling is because what you do in your training is you use the watch me method. Hey, just watch me do it. Hey, I'm just going to jump on the phone and I'm going to call this guy and then just do it like me, right? Well, that's not repeatable. And ultimately your job as a CEO or somebody who's running a business is to create a business that ultimately does not need you, right? If I got hit by a bus tomorrow, could the business continue to operate without me? And so you got to build with the end in mind. Sure, you might not be able to afford it, or you can't necessarily hire that person right now and you're wearing multiple hats, but as soon as you can, that's where you should be rolling back your profits and your equity is back into hiring another person. So
walk through. And so I've talked about hiring, and especially starting with VAs, virtual assistants, and executive assistant, and those things for a long time. But I'd love to hear, because I get this question all the time is, who's my first hire? What should they be doing for me as I'm getting started into this business? And really helping the listener break through that thought process of why I can't give that thing to somebody else to do. I've got to do that thing myself.
The best it was ever explained to me was, is this $10 an hour work or is this $10,000 an hour work? Not to say that the $10 an hour work is meaningless or lesser. It's just your individual skill set or your time is not best spent on that $10 an hour task, right? An example would be, you probably could get on Squarespace and build a website. You probably could. The amount of time investment it would take you in order to actually do that job, what does that cost? Because if I just gave it to somebody who was an expert in that and paid them a premium, paid them $1,500 to do it, and they did it in a day, right? That would be a much better use of my time, right? Time, cost, and quality. You can have two, but you can never have three of those things all at one time. So you have to make a decision on how you're going to invest your time, because time is ultimately money. And so for me, it's always just been about that. It's really hard. An example would be in the commercial brokerage business, the curse of success. You're getting successful. You got bookings, listings, you're meeting with clients, you're networking, and you have a 0 time to prospect, right? So what do you need to do? You need to find somebody who has the time and invest in them to call and prospect constantly so that the funnel is constantly full. You know what I mean? And so that's, I don't know. I think that if you read the book Traction, you start to look at scoring your business on a weekly and quarterly basis, and you start to break down issues. The better you become at business, the better you become at solving problems. That's it.
Who was your first hire, like for your syndication business?
It was actually a partnership. So we were all on this path, kind of working together towards being in the syndication space. And one of my partners, Jeremy Cisneros, he is literally a commercial loan originator. The guy underwrites for a living. I can underwrite, and I can look at a multifamily pro forma all day long, but I'm never going to do it as good as that guy, right? Like it, and opposite of that, his skill set is not this. His skill set is not jumping out in front of people, talking in front of people. He just hasn't had that experience, and it's also not really his nature or his character. So, we quickly learned that that's like an operational type of role. You're underwriting, acquisitions, that whole process. So he leads it. When he says, hey, I need you to go get a quote on insurance, or I need you to call the assessor and get some tax numbers for me, right? Or I need you to call the PM. We all fall in line because we have already defined what the roles and the responsibilities are and who owns what. When I say, hey, we're going to do X, Y, and Z for marketing and sales to go raise capital, or I'm going to go on 24 podcasts in the next 6 months to really develop the brand around Growth Vue Properties, everybody falls in line to support it. If that makes sense.
Makes complete sense. No, I love that. You have to delegate. You have to know what you're responsible for, and kind of stay in your lane a little bit. I have a very, very similar, structure in our company as well. My business partner is the numbers guy. Can I underwrite? Yes, but I'm never going to be as good at it as he is. And I don't want to be. It's not, it's not where I want to spend my time. But I need him, right? And he needs me, or like very different roles. And we can scale faster and better and provide better service to investors because of it. If you're interested in multifamily real estate, but don't know how or where to begin, our guide on how to start investing in multifamily real estate breaks down everything you need to know about identifying good investments plus real world examples. Download your copy in the show notes or visit lifebridgecapital.com/start now to start your journey in multifamily real estate. Speak to the marketing side a little bit. And I know so many investors right now that are operators that are listening are saying, you know what, I don't understand this marketing thing. Some don't want anything to do with it. Some do. Some don't understand it. Lay out some basic things that we should be thinking about as operators, as far as obviously everybody's trying to raise money, trying to build that trust with investors, right? How have you done that well? What's been some key things that you learned maybe from your marketing background that have helped the most in this business?
Yeah, I think the first one is just building a brand. You got to have an identity, right? Of like who you are and what your message is. The reason we're called Growth Vue, and it's spelled VUE, right, is vested united equity. Most people, when they're getting into real estate investing, what do they think? I got to have all the money. I got to get the loan by myself. I got to go find this property myself. I have to take down. It's this very closed mindset of I have to do everything myself. But when you have a growth view or a growth mindset or a growth perspective, and you realize that if we go bigger and we get more scale, we can all make more money, right? By coming together, investing our equity together, united, right? So I think the brand is important because it sets the stage for what you believe is an organization. It's also just how you show up. It's if you're a new syndicator and you're showing up to talk about raising capital or something, and you're like, oh yeah, I'm just putting together real estate deals. It's like, it's uninspiring, and there's nothing for people to really latch on or remember or think about. And so brand is, in my opinion, important. How you show up matters. Yes, you need a website. Yes, you need a brand. Yes, you need to make those investments in some advertising and some content and a Facebook page and a LinkedIn page and all those types of things in order to just tell your story. Because what most people don't understand is 90% of the research process is done. This is just statistics before the customer ever picks up the phone. So if you know you're going to go meet with somebody and you're talking about, they know you're coming to talk about raising money or investing in multifamily deals, guess what they're going to do? They're going to Google you, right? They're going to do some research. So go Google me and see what comes up. I've been very intentional about the content that I put out there and the brand so that I can control the narrative around me and I can control the narrative around Growth Vue. That's a big part of it. Go ahead.
No, I like how you mentioned, I love what you said. It's about how you show up. And I appreciate you even giving an example there, just how you present yourself, right? And, how you say what you do. Is it compelling? Is it catchy? And what about, any other ways how you did that, how you show up, in a way that attracts investors and builds your brand?
I think it's just getting out there and creating content, doing a lot of what we're doing right now. It's one thing that you do very, very well that's obviously helped you is, you have a podcast and you give away a lot of information for free. And it's funny, in the world of at least the commercial brokerage business, there's this sense of like, oh, we can't give away our secrets, right? But the entire brokerage business is becoming marginalized as on the residential side, as Zillow, Redfin start to come into the brokerage business. Everybody's lowering their commissions in order to compete, right? It's starting to happen on the commercial side. LoopNet's becoming the authority. People are actually really starting to go there to syndicate their listing. It's becoming the MLS of commercial, right? CoStar pretty much owns the market. Reonomy's coming out there with good data and information. And so you have to provide something beyond just commissions and the old school, like, we have the biggest network and we do the blah, 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 and we have the biggest team. That's great. But at the end of the day, I want to work with the best. I want to know who's the authority on the topic. So authorship and content creation is probably the next most important piece. And it's beautiful because it doesn't cost you anything. It's literally just getting out there and giving some of your time, jumping on a podcast for 30 minutes with a guy like you. You know what I mean?
For sure. No doubt about it. It can be extremely inexpensive just to get your brand started and get your name out there. But I love just thinking about how you show up. No doubt about it. Samson, what about anything you would have done different, say, on your first syndicated deal, now that you know what you know?
I think partnerships are key. The hardest part of getting a deal done is you don't have any track record, right? And so, being on the commercial brokerage side, understanding what goes through a broker's mind, the broker cares about one thing: can you close? Because he don't get paid unless the deal closes. So how do you add people or partnerships to your team that are going to help you do that? So one of the groups that we partner with is a group out of New York. They have 40 years of syndication experience. They manage $750 million in multifamily assets. They have $160 million that they personally own. So when I come to the table and say, hey, here's our co-investment partner, that has some power to it, right? People take you a little bit more serious. And that's a relationship that's been fostered over years, right? I mean, we meet regularly, we send them deals, we co-underwrite stuff together, we talk through it. They give us a lot of their feedback and expertise. We do the same because we understand the core markets where we're in. Mm-hmm. And it's vital, so people partnering with guys like you who have track record, right? I mean, one of the beautiful things about this business, at least that I've come to experience, is everybody's willing to help each other. I have yet to meet a syndicator that's just like, screw you, I don't want anything to do to help you. They're always willing to help each other because they all know what it was like when they were just getting started and there was nobody else there to really help them. They needed somebody to support them or just say, hey, come on, co-sign on my deal,
That is a pretty amazing part of our industry. I agree. It's just amazing, the friendliness and people that want to help. It definitely helped me to get started, no doubt about it. What about how do you, in looking at a new project now, and especially knowing what we went through over the last year, how do you prepare for a downturn?
Well, I lived one in 2008, so I'm incredibly risk averse. In 2018, I was literally downsizing my entire life. We sold our primary residence. We sold off single family and small multifamily stuff that we didn't feel was well positioned. We literally moved to cash and we said, hey, we're just waiting for a rainy day. I don't know when it's going to happen. And people were like, you're crazy. What are you doing? The market's incredible right now. I mean, that'll never happen. And history doesn't repeat itself, but it definitely tends to rhyme. It's not going to happen just like it happened before, right? COVID, who saw that coming? I look like a genius, but I literally 2 weeks before that was standing at a meeting and I was speaking to the city of Fort Collins. And I was talking about how we needed to drive more economic growth through small businesses in Northern Colorado in order to be competitive in the market. And I literally said, I told the story about the Dow Jones falling, 777 points in 2008. And I said that would be equal to the market falling 1,800 points today. And 2 weeks later, it happened. Literally 1,800 point fall in one day. Because we have this tendency as human beings to constantly, it's called rosy retrospection. We look back and we tend to see the past in a better light than it was actually happening. It's important. It's an important part of the human condition, because otherwise every hard thing that happened to us would just put us into a depression, right? And so we have to be able to look at that in that way. But it's also a fallacy, because we look back on things and we kind of rub out the parts that we don't like.
Blessing in disguise, right?
Yeah.
Forget a little bit of it.
Totally. And so you have to constantly be going back and doing that. And I think some of the things that you need to be judicious in your underwriting. Paying a premium on cap rate to buy something just to get a deal done is a recipe for disaster. I mean, there's a reason that your exit cap rate is generally worse, right, than what you're getting in at, because you're anticipating something worse. But buying something and betting on the come that the cap rates are going to compress and it's going to get better for you is a recipe for disaster. I said it before and I said it again. Everybody's a genius in a bull market.
Right.
For the last 10 years, you could have you could have bought something in Detroit and made money, right? Because that's just how the nature of the market is going. But the dynamics this is uncharted territory. We have never seen this. We have investors, international investors coming into our market because they can't get yield anywhere else, that are coming in and competing for this stuff. So they're willing to pay a 3 cap and a 5 cap market. They don't care, right? Because to them, it's about capital preservation. We're printing money at an insane rate, right? And inflation costs are going through the roof. So I'm not even concerned about inflation as much as I'm concerned about stagflation, where things get so expensive that nobody can afford to hire, nobody can afford to run their business, we can't afford to build. And so the demand buildup is going to continue to be there, because we need like 4.6 million new apartments by 2030 in order to keep up with demand. But a lot of people
talk about an affordability crisis, things like that. And it sounds like a lot of what you're saying as well. It's so interesting. On that same note, Samson, any big predictions for you or small over the next 6 to 12 months in the real estate market?
I think that the biggest opportunity right now is we all know that net migration pretty much determines, where the path of growth is going to be and where the opportunity exists. And so I'm personally seeing that people are exiting the coast and moving inward, and that just kind of causes a ripple effect. And so I think the Midwest has a ton of opportunity right now. You can still find some good cap rates. You can still find some reasonable price per doors. And that's where the most upside potentially exists. And I also see that conversion projects are probably going to be the number one opportunity to take maybe an old hotel and convert that into something like an apartment complex that offers affordable housing.
What about any daily habits that you have that you're disciplined about that have helped you achieve success?
The number one habit that helps me achieve success is there's really like 7 categories of goals or pillars in my life that I tend to follow, which is my faith, my family, my finances, my career, my social life, my mental health and growth, and my physical health. And I'm not much of a journaler, but every day I try to take inventory. I hit those 7 bullet points and I go, how did I do in this area yesterday? Or how am I doing this week on this thing? And where do I need to get better? I have watched too many friends and too many entrepreneurs let one aspect of their life dominate and sacrifice something like their marriage or their family to just build an awesome business, right? That's not worth it to me, right? So this allows me to actually get the imbalance that I need and say, wow, I didn't give my family enough attention this week. I'm going to spend a little more time there. I need to back off a little bit on what I'm doing on my work before it's too late. So take inventory.
Appreciate regularly. That perspective and thinking through those things. It's incredible. You can just name those things off too, that you have that kind of thought or sight on those things, parts of your life. I think that's impressive by itself. What about your best source for meeting new investors right now?
Well, what's interesting is as we're coming out of the COVID pandemic, people are craving coming together. And so I've always been a great connector. So I spend a lot of time just connecting people through hosting meetups, through hosting happy hours, through even with some webinar education, but really trying to do more in-person stuff to just really bring people together within your community. I think we can go too far hyperbolic. Like if you go on LinkedIn, it makes me want to vomit because nobody's there to actually connect anymore. They're there to just push their narrative about their business or whatever. And so how do you take something from maybe an online connection and convert it into a phone call, which then converts into an in-person meeting, right? How do you jump on a podcast with somebody who happens to be an operator who owns a ton of real estate down in Colorado Springs and say, hey, the next time you're in Denver, we should connect because maybe we can do something together or JV a deal or do something like that. So for me, it's just getting back to the basics. Marketing is funny because everybody tends to like jump on the bandwagon to do these things and then they go too far in that direction. And so when everybody's going that way, I tend to go the opposite way. Like direct mail, personal letters. There's a great book called Blue Fishing. If you haven't read it, it's amazing. And it's just all about that personal touch and wowing people and making them feel special that I think is really the key. And then investors are everywhere. I mean, there's so much dang capital on the sidelines right now just waiting to be deployed. So if you're an authority, you can create content, you can educate people on the power of passive investing. It's pretty much a no-brainer. Like they will trust you to place capital. So
appreciate the book recommendation as well. It's awesome. What about the number one thing that's contributed to your success?
Honestly, it's just consistency. And it's easy to, I'm not perfect, but the trap of, not having patience and the delayed gratification of doing stuff. If you were a syndicator and you were getting started in 2020 and you were going full tilt on this and your whole world got turned upside down, you might have given up halfway through this and be like, this is freaking hard. Like I can't see any deals, but I'll tell you what, the number of deals that we underwrote in 2020 is less than what we've seen in the first quarter of this year, right? So consistency is ultimately the superpower. You have to find a way to just do something every single day to move the business forward. It doesn't have to get done now, especially when it comes to syndication, right? If you were out there trying to do single family homes, like you might do 1 or 2 deals a year, right? And after 10 years, you got, 15, 20 apartment complexes or properties in your portfolio. Or you could just spend 3 years of your life dedicated to raising capital, building partnerships, sourcing and screening deals. And in one deal, you have ownership of more properties than you ever did just by feeling the need to do something or get something done. When the reality of it is you miss sight of the big picture, like what you were really trying to accomplish.
Samson, how do you like to give back?
I like to give back with my time, just involved in my church quite a bit. And I think one of the things that I'm most excited about is we're focusing on building our own endowment fund, right? It's one thing to give to a charity. It's another thing to build an endowment that not only can invest in your deals, but also make investments in charities that we care about in perpetuity. And so, I can pay the government taxes or I can build an awesome endowment and help a lot of people. So for me, it's about building just an awesome platform where I can help people and just honor God, honestly.
Awesome. Well, I love that why and that the way you're giving back there. What an incredible idea as well. And I just appreciate you just honoring the Lord in that you're giving back in that way and helping so many others. So Samson, great show. I just appreciate you just really highlighting your expertise and experience and, and how you've brought that into the syndication business and scaling and hiring people and the departments. I think just thinking through that as a new syndicator, like how are you delegating these things into different departments and who's responsible for those things is so important. Building the brand, you talked about you have to have an identity. I love it. How you mentioned it's all about how you show up. And I've talked about that numerous times on the show and even related it to when I was a police officer and how your uniform can save your life. People talked about me, how shiny my buttons were could save my life. And some people think it's crazy, but it's so true. When you're on the side of the road and you're dealing with professional criminals. Well, now we're dealing with professional investors, right? And so just appreciate you talking about that. How can the listeners get in touch with you and learn more about you?
So if you want to learn about what our group's up to, you're going to head over to the growthvue.com. That's view as in VUE.com. But if you want to really get educated on passive investing, we are building out our own course, which is basically helping build sophisticated investors, helping them understand how the game is played, how to be a good passive investor, how to be a good LP. And that's over at passiveinvesting.pro. We've put together a masterclass that you can take over there and some cool little nuggets that I think you'll enjoy.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.